I think we're good to get going for everyone else who got here on time. Melanie, you want to kick us off, or Julie?
I can kick us off. Thanks to everyone for being here. We're really excited to be joined by Jim Fischetti, Steve Murray, and Sharry Schmid. First of all, we'll start with our amazing sponsor, Matthew Hay from Chase. So I'll bring him up first so he can talk a little bit about Chase and we can get our conversation going.
Hey guys, thanks so much, Melanie. Thanks to DMAR as well for having us on. And of course, thanks to Nobu and Julie as well. So I'll be really quick with you guys. I know this is geared towards broker owners. So the main thing that I want to talk about with you guys today is a tool that Chase has to help you help your teams. It's called Chase Agent Express. If you haven't heard of it, please let me know. Shoot me an email, a text, a call. I'm happy to talk about it further. What it is an opportunity for your agents to get connected with pre-approved buy and sell side leads without having to pay for the lead up front. If you're looking for people that are going to grow their business in a new area or in an area that they're well established in, it's a really good tool for them. You know, there's maybe 15 different home lending advisors just here in the Colorado area that work locally, but I've got about 900 that work in a centralized sales team that are constantly in need of agents. So please message me, send me an email, give me a call about Chase Agent Express, and I'd be happy to get your agent signed up for it. I'll put my information in the chat, and I look forward to hearing a little bit more about the changing environment and how we're all going to adapt to it. So thanks again. Take care.
Awesome. Thank you, Matthew. All right, Nobu, you want to kick us off on today's conversation?
All right. Thank you. And Matthew, yeah, if you could put your information in the chat, it'd be awesome.
Yes.
So yeah, we're going to talk today about a topic of mine that I think is going to be very salient for those of you guys who are either kind of coming off the last 4 or 5 years where we've been kind of drunk on business and kind of seeing the shift come around. We're talking amongst the four of us here about like what has been going on, this market shift and the short-term memory that folks are seeming to lack. Going back to long-term memory stuff. So we're going to talk about brokerage ops, folks. We're going to talk about team building. We're going to talk about agent retainment and attraction in a time when the market is looking to change. And if you're a broker owner or a manager here in the audience or looking to build one, this is going to be a really good conversation to have as we go into the next 4 or 5 years in this business. Real quick, I want to get our panelists to introduce themselves. And you know, before we kick everything off, maybe we'll start with you, Steve, on who you are, where you are.
Okay, my name is Steve Murray. This is my 46th year in the industry. The last 35 years as the head of RealTrends and RealTrends Consulting. Today, I'm a senior advisor to RealTrends, which is now owned by Housing Wire, HW Media. But I retained, Scott Wright and I retained the consulting practice. So I don't have responsibility for all the things I used to do, but still day in, day out engaged in working with brokerage companies on general consulting, merger acquisition, valuation, and succession planning.
Super cool. Sharry Schmid.
Good morning, Nobu. Thanks for having me on. So I'm Sharry Schmid, and I'm president of Edina Realty. For those of you not familiar, Edina is Minnesota's largest brokerage, and actually throughout the Midwest. So we have 2,500 agents and 75 offices spanning Minnesota, Western Wisconsin, and also the South Dakota market. So I would also like to share with everyone that Nobu got his start at Edina Realty. So if anybody wants any dirt on Nobu, I have it. So please feel free to reach out to me. I will take bribes. But in all seriousness, we miss him. He has been and still is phenomenal to work with. And if you see people in the background with me, I'm on my phone. I apologize. We're trying to get me over on my computer. So.
No problem with that. I appreciate the dirt. Sure. Kind of jerk back then, and it's still kind of doing the same thing now. Jim Fischetti from NextHome.
Yes, so this is my 38th year in real estate, and so I've I like to say the first house I sold, the buyer's interest rate was 14.5%. So I've seen some changes. Been everything from an agent to in leadership. I'm currently vice president learning development for NextHome with specific emphasis on broker owner profitability and improving production amongst our people. So those are my primary goals, and love real estate and glad to be here, and thank you for the opportunity.
Yeah, well, I love this conversation with these folks, because you're going to get guys in the audience not only an idea of kind of the big picture, but boots on the ground, because you have a lot of independent spirit here with these folks, along with the ability to scale. It's been nothing short of a miracle watching Edina and watching NextHome scale over the last couple of years, especially now when folks are starting to kind of dial it back. So we'll get into that in a minute. But Steve, I kind of wanted to talk with you. You had I will say that you continually bring content to this world that is different. That's a lot more. You talk to people every day. Let's talk about this shift. People are freaking out. Some folks are freaking out. Some folks are seeing opportunity. When it comes to the kind of the 10,000 foot perspective, we're seeing things shift in this market when it comes to brokerage ops. Mergers and acquisitions I'm hearing are starting to slow down a bit. You've got folks kind of concentrating back on those margins. You've got companies like Zillow and Open Door coming together, which it's not surprising to me, but it is shocking to see it happen so quickly. What are you seeing that we're not talking about, right? What are you seeing that should be salient to folks in this audience who, they're just trying to slug it out day in and day out?
Well, the first thing for everybody to understand is that every downturn going back to the late 70s, early 80s has been different in some regard from the others. This one is more like the 1980-82 downturn, mainly because we had hyperinflation. The chairman of the Fed, with the support of 2 US presidents, said, we must kill inflation. So Paul Volcker jacked the rates up. Most of us who were around back then know the realtors were trying to sell homes at 15%, 16% mortgage rates. I remember even into the 90s, we thought if we could ever get mortgages back to 10%,
Yes.
God, we'd sell every home we had. So here we are, perspective. This is going to be the Fed chairman last night at their meeting in Wyoming, basically called Wall Street's bluff and said, we're going to jack rates up until we think we've got inflation thrashed. Mortgage rates could go to 7-8%. That's my belief. I don't think much higher than that, but I could see them there in the next 6-8 months. I think he basically told them, if we have to have a recession and unemployment numbers going up, we're going to do it because inflation is a far greater threat. Okay, having said that, here's the interesting news. There are still between 4 and 5 million more households than there are houses.
Yes.
In the United States. That's both single family and multifamily. So the demand is still there. Secondly, most importantly for brokers and agents, is that the trend over the last 20 years is higher and higher usage of agents by buyers and sellers to actually execute a transaction. So, this is not panic time, but this is a time where we're going to see declining resale rates. We're going to see the home builders have pulled back significantly in what they're going to build, what they're going to start, and what they're going to do over the next 6-8 months. We have, in our valuation practice at RealTrends Consulting, on the one hand, valuations are going through the roof in terms of demand from broker owners for all kinds of reasons. But the merger and the acquisition of brokerage companies has basically come among the major deals has come to a halt. It's all of the major purchaser investors, whether they're Berkshire Hathaway, Realogy Brokerage, together with all the private equity financed shops, they have basically come to a screeching halt. and said, we'll await further developments into the first or second quarter next year and see where we are then. So right now, the valuation of residential brokerage companies is probably, well, certainly it's lower than it was a month ago. And for some people, it will be non-existent. There is no market. Unless, of course, you want to sell your firm for no money down and take an earn out over 5 or 6 years. You know, the key thing that happened is you look at 2019 and brokers were operating at a certain level and they had a gross margin. That is the money that a broker has after the agents have been paid. National average gross margin among all brokerage companies was probably in the 14% range, 15% range in 2011. Pardon me, 2019. Then you have 2020 and 21, and we have this just explosive surge in business, which drove up brokerage revenues and drove up most brokers' profit margins faster than anything I've seen in my entire career. Because brokers didn't actually have to invest a whole lot more money because of the increased sales. They just it just exploded. So they didn't add a lot of offices, they didn't add a lot of staff, and their profits went up. What was going on, however, is a great deal of that increase in sales accrued to the top teams and agents. And the top teams and agents got higher and higher splits. Causing that also was, of course, new models of brokerage companies, whether it's Compass or EXP or Fathom or United Real Estate or HomeSmart, would go on and on. So what's happened during that period of time while volumes exploded is brokers lost about 2.5 to 3 points of gross margin. So then we come now, especially May, June, July, sales fall 10, 15, 20, 25%. And the leverage of a brokerage side on a brokerage ops works both ways. When we had 2020 and 2021, the leverage, the explosion of sales, most of that money drops to the bottom line. But when you cough up gross margin and then sales fall, well, the leverage works exactly the other way. So we have clients who've seen a 20% decline in sales and an 80% decline in profit.
Wow.
So brokers are now, and their gross margin is lower, and they don't actually have a lot more to cut, but they're going to have to either find ways to reduce headcount and costs and get more efficient even, or find alternative revenue sources, whether that's mortgage or title or property management or property casualty insurance, or in markets where it's available, escrow, or it's going to be a very tough next probably at least 6 months and could be 18 months. But here's the thing. It's not going back to what it was. I mean, the one thing I can say for certain in all these years is gross margin is rarely ever recaptured from agents and teams, rarely. I mean, we know that there are a number of national companies, Keller Williams, Remax, and others made huge changes in their cap plans or their comp plans or their fee schedules to keep their top teams and agents from defecting to these other companies. You're never going to get that money back. And then you top it all off. We, as some people may know, the people who now own RealTrends, and we still work with them all the time, they just issued, 2 months ago, the agent and team rankings for 2021. And the number of agents and teams that qualified, they had to do at least 50 sides or 20 million in volume to qualify at any level. the number jumped from 18,000 to almost 24,000 who qualified for our rankings. That was more people that we ranked in total 5 years ago. So the number of top performing agents and teams has exploded. And that group last year, including all the realtors among teams and the individual agents, totaled about 4.5% of all the realtors in the country, and they were just about 28% of all the volume in the whole country.
Yeah,
So-
Sharry, you're bringing up, I think, a huge point, probably the biggest difference that I've seen. And we're going to get Sharry back on here. She's switching over to her computer here. So maybe Jim will go to you when Sharry kind of comes back on, and Melanie, when she comes back on, if you can highlight Sharry back again. You're bringing up a really big point here, is that we have to kind of look back again as at margins, right? Because I don't know many teams who aren't busy even now, right? So they're going to still be able to have that leverage. Jim, and so Sharry's back. So maybe Jim, give me your thoughts on that. I mean, do brokerages need to start thinking about training these teams better, keeping that innovation in-house? What are your thoughts on margins nowadays, kind of being concentrated at the top?
Well, I'm with Steve. Margins really aren't gonna, people don't go backwards, and agents get used to those type of revenue arrangements and the opportunities available to them outside of forces that, they can open their own brokerage, they're low fee, so I just don't see those margins coming back. And part of that is because they're a bigger and bigger force. Larger agents are taking much more market share, and they drive the business. And many of them, I mean, been around long enough to know that many of your teams today are bigger than brokerages when I got started in real estate nearly 40 years ago. And that, these people running successful teams today have brokerages inside of brokerages, and they're going to be cost conscious. They're under pressure with margins within their organization. And so that cost of sale that they're paying the broker is a bigger deal. And it's, in their mind, the easiest to reduce. So, in reality, as the market continues to shift, I actually think some of the bigger producers will look for a more favorable compensation model between themselves and the brokerage.
Yeah, might be a good way to trim within their teams as well. A good point. Sharry, I'll get you in on this as well. What are your thoughts on that? Because I still talk to many of my friends at Edina are running teams now. They're pretty efficient with what they do. I have never seen a group of people kind of glom on to a brand that Edina brings to the table. You guys have earned it. I'll say that for almost 30 years now, 40 years that I've been watching you guys. What are your thoughts on that team building aspect? Do you educate on that now specifically, or but how do you talk to these guys about their business?
Yeah, well, I would say with all the comments that Steve and Jim, I would echo that. Once those margins are gone, they're gone. And as a brokerage, and one of the things for us and for Edina is we focus, to answer your question, yes, I mean, it's very much focusing on teams, but I would say that we've had a unique opportunity because, Nobu, as you know, there was a time in the marketplace where Edina was known as being resistant to the team component. We definitely have shifted, but what that allowed us to do was really to continue to garner and work with the individual agents, because there's a lot of really good agents out there who don't want to be part of a big mega team, and they don't want a team. They might have a person or two helping them out, and they really rely on a brand like Edina to, in essence, create the rest of that team support for them. So I guess what I'm saying is, I think there is an opportunity, and that's something that I continue to work with our team here to build out, so that if for the team, and we've got some pretty big teams that are building and continuing to build, we're supporting them. And then for our individuals, we're continuing to support them as well. So that my mantra and where I continue to go when I'm talking, especially on our company wide, whether you're an individual or a team of, our biggest one or 20 plus now, we've got resources and support, but it's different. And so whether it's for myself or the regional managers or the manager, how we are working with and getting in, it isn't cookie cutter. It isn't one size fits all. When I started in the business 20 plus years ago, you could come in and in essence, you could manage an entire group the same way. It's very different today. It's more individualized and it's more specific to that team, or like I said, if it's an individual. The other thing that I would say, is a big value when you bring that brand that Edina brings, there's a lot of new agents that we're able to bring into the mix. And I would tell you one shift that I am watching, and I will continue, we'll continue to see if this is post-pandemic or something more, which I think it might be. A lot of 20-somethings who are interested in coming into the business, which is fun. It brings a different energy. They're doing the business very different. So really getting in with that group to understand, okay, do they want to be, are they our next up and coming big team? Do they want to go onto a team, or are they looking to be that individual with maybe one or two people? So there's a whole nother dynamic that I haven't really heard the industry talking a whole lot about yet, but for me, it's a lot of fun to see and to get in and around that group and really harness the energies that are there, the way they want to do the business and how they're going about the business. So that's a long answer, Nobu, but
that's pretty awesome. Actually, I kind of want to delve deeper into that, because it seems like in almost every other industry, the millennial dam has actually broken. It's now just kind of starting that way in real estate. So let's actually just talk about agent development now, right? So, and Steve, jump in on this as well. What are you seeing that these folks need? Because your guys' markets, Minneapolis especially, is a lot like Denver, like 10 years of just unprecedented growth, right? And you've got folks who are coming in still able to somewhat, dive into an industry and make some money. What trends are you seeing with these young folks when they're getting their business started? Are they entrepreneurial in ways you haven't seen, or are they more sales oriented, or are they brand focused? What are your thoughts on that? Because I know that Jim can jump in on that as well. Sherry, go ahead.
I would say a couple of things. For yours truly, I am not on TikTok, but I have heard from several that, one of the bigger components for, especially, I mean, even past millennial, now we're talking Gen Z, the tail end of that millennial group, and now the next generation of Gen Z, but it's all passive income. And how do I get multiple lines of income stream coming in? And do I necessarily want to work for a corporation? Do I, what is my long-term ranger? So I do think we're seeing, we are seeing younger and younger agents coming into the business wanting to talk about these forms of wealth enhancement, how to build wealth, how to invest in real estate, how can they then launch and start that career? Is that a team? Is that individually? And so, like I said, from an agent development standpoint, we are definitely shifting and understanding that model, along with, we know what works. There's certain elements of this business that are tried and true. They're never going to change. And so those are components, just that basic block and tackling that we'll continue to train on and do that. But there's definitely, from a recruiting standpoint, there's a group out there to go after and to target. And that's something that we've been very focused on. And with that, we can build careers, or we can add a value to our teams and help them in their recruiting efforts. Because not everybody not everybody wants to go do this business alone, but they want to be part of a team, and they fit perfectly into a certain component of a team. So there's, like I said, what's fun, but it's also the challenge. There's a lot of individual approaches that need to be taken, I think, in this business and as we go forward.
Oh man, I love that. And Steve, let me actually get an opinion from you on that. That's not the first I've heard of. Realtors aren't necessarily salespeople anymore. Well, they haven't been salespeople in forever, right? But what this increased narrative of the home as part of wealth management, part of an investment portfolio, hearing that coming from a 22-year-old, 23-year-old is actually fairly amazing. But I've heard that not only from other broker owners and managers, but also technology companies who are trying to come in, get into brokerages and teams and agent ecosystems earlier to talk about that. What are your thoughts on this shift from a wealth management, from a sales oriented to a wealth management style focus on marketing and collaboration? Steve?
Well, I'm no expert. You heard me comment when I was out at California making the presentation, and one of the things I think I said was, you know, we can thank HGTV and all of its spinoffs for glamorizing our business for us, because that's what essentially they've done. If you look at this, and I agree, Sharry, I hear all over about, and we see the numbers, 20-year-olds. I mean, we've got a client right now, a woman and her husband, they're in their mid-30s. They got in the business 6 years ago. They've got almost a 30 million gross commission revenue team now. In like 5 years. They found a niche. They drove into that niche. I think that you know, we wrote a book, gosh, it's been 8 years ago now. And in that book, it was called, I even forgot the name, Game Changer, I think. And it was the second. And we talked about facilitators and counselors. The people who can execute a real estate transaction versus the people that add value because of their knowledge of markets and house appreciation and great neighborhoods versus okay neighborhoods and trends. And I think we're seeing, from everything I can tell, the young generation of people that are coming in, this is a general statement, they're smarter. They tend to understand that this is not a cakewalk. This takes hard work. But they also understand that I got to build a relationship and find out what's on my buyer or seller's mind that goes beyond just the house itself.
Yeah, that's
so awesome. I agree with Sharry. I think she's right.
Love it. Jim, how the hell do you train on that? Because I don't want to.
One of the big differences is that when I got started, the consumer had to come to me to get the data. There was no data available. They had to come to a real estate salesperson. Even if they wanted to sell their house on their own, they had to come to me to get a CMA just to know what to price their house at. So the biggest difference today is real estate agents aren't salespeople. Their job is to take the data, decipher it, distill it down, and then deliver it to their client in such a way that the client can make a good decision. And so one of the reasons why real estate not only has been glamorized, and I agree with Steve on that, and what Sharry's saying, the other thing is we're no longer salespeople. We are true advisors, and the people who succeed at a high level have a fiduciary responsibility. And because of that, more people want to help people. And the job now is helping versus 35 years ago it was a sales job. And so teaching people that their job is to really take the data, deliver it in such a way that their client can make a good decision, that paradigm shift, and it's only going to become more and more important. If you think about it, throughout history for me in real estate, you needed less experience to work with a buyer and more experience to work with a seller. The last 2 years to 30 months, it was just the opposite. You didn't need any experience for a seller. You actually needed infinitely more experience to help a buyer navigate this difficult situation. And because markets are changing so fast and so quickly, and that's probably one of the biggest things about this particular shift, is the speed at which it's changing is what has really blown people away. So your ability to pivot and learn and provide real value as to understanding what's happening is the critical aspect that our profession needs to really anchor home.
Ooh, that's actually a really good point too. It kind of brings the second question into play. I mean, I would argue that we've had about 15 years worth of sales in the last 10, right? There's so much compression of business in the last 3, 4, 5 years, you know, and what I'm hearing a lot from friends of mine in the business all over the country is they can take a sigh of relief. It's like, I can go on vacation again, and my wife, she went to Chicago. She's like, I can do more client appreciation events again. I've got time to actually do it. So like you're saying, all of you guys are thinking like we need to start acting more in real time, but then also like think long term, right? So how do you guys think about that when you're talking to your agents, you're talking to your team leads? It's like, okay, hey, learn how to use a TikTok now for business later, right? Which is I think it's going to be a big key. Jim, maybe you start off on that. Sherry, I'll get your input afterwards.
Sure. So it really, so we should never forget that a person's sphere of influence is the largest driver of their business. Long-term, a solid relationship with their people is going to be critical for their success. And so it's like, I believe your wife saying, I can do more client appreciations. So that significance of looking at people as a long-term relationship and adding value to them and being a resource, you need vendors, whatever, that relationship. Because the other thing, one of the reasons why so many people are coming after our industry is because I bought a second house recently, and man, you spend money out the wazoo, right? We're buying new furniture, we're doing this, we're landscape. So every time a real estate transaction occurs, it gooses the economy in that location significantly. And so when we build that trusted relationship, then the other thing that we're really driving home is real estate is the #1 creator of wealth in this country. We are missing the opportunity as an industry. We have not shared with our sphere of influence the importance of them personally investing in real estate outside of their primary residence. And the loss of revenue and the loss of wealth that is being there is just phenomenal. So the more we lean back into providing value to our people and treating them as if you're going to be in the business for 30 years, a 30-year relationship versus a 30-minute cycle.
Yeah. And Sherry, let me get you in on that, because like the acquisition costs, and Steve, maybe we can jump in on that as well. Acquisition costs of a referral is much lower than the acquisition cost of a new client right now, right? Leaning into that referral base, but then also factoring your partners, right? Mortgage, title, and all that stuff is going to be even more key now to that future business mid and long term. So like when you're talking about like leaning into your sphere, right? We've been talking about this for a million years. I think it's going to be more apt and more salient now. How are you talking to your team, Sherry, about that and utilizing your mortgage and title services that they're happy with? They literally may have had a happy transaction with them. How do you get them to be evangelists for you and to get them to come back through your teams or through your agents?
A couple things I think of with that question. One, with regard to the sphere and the comments I made previous about, there's just certain things that are tried and true in this business, and those basic, blocking and tackling, and sphere is one of them, and staying in touch and staying connected. And, there's all kinds of ways that any of us that have been in this industry have heard over and over again with, client appreciation and touch points and doing all of those components. And like Steve and Jim have said, being that real estate advisor. So not just when you want to transact, but anything related to the home ownership cycle. And of course, that would include mortgage and title. So you will see larger brokerages, and that's where it does become a benefit to the team, because there just are other resources that we can bring in and continue to bring in and build onto that, making, again, whether you're an individual or making that team lead the center of the transaction. Yeah. But Nobu, the other thing I would add, that, and something I am watching with a lot of intrigue, and that is, couple quick examples. One is a 23-year-old from our area who did not grow up in our area, within 2 years of selling real estate, did over 70 transactions last year and is on pace to do a similar amount this year. The vast majority of his business came from social media. And I know, when I tell that story and there's people listening, rolling their eyes, because I'm one of them. I'm not necessarily all about social media. In fact, if I could toss it and be done with it forever, I would. But I can't deny the fact when you watch a 23-year-old come into a marketplace where they didn't grow up and do that kind of business and how they garnered that on social media. Also watch someone mid-30s, and this is something that we're watching in real estate also, mid-30s who hit our highest level of circle recognition here in about June, July, is full-time now in Florida, and recently within the last 18 months launched their real estate in Florida and doing extremely well. And so we're hearing more of that also. And so those are things as we watch in this industry that are very different than those of us who started 10, 15, 20 years ago. Technology enables more of that. And so another piece as a brokerage that we have to be on top of and stay on top of is looking and watching that dynamic and the changes there. And I'll give one last example because I think this is kind of a fun one. Last week we had a home services event, and the entire week was people taking pictures, lots of photos, lots of social media. Unfortunately, Edina Realty lost one of their legendary agents, 73, to colon cancer this past week. There was a celebration for him. The average age at that celebration, it was a couple hours after the funeral, the average age of that celebration was probably about 65 years old. Not one picture taken with that group. At the very end, somebody said, we probably should be taking a photo. My point to that is the stark contrast between all real estate, but the stark contrast between how different generations are choosing to transact and do business. And I think we will continue to see that evolution. And the other thing that I would say, and I tell agents this all the time, because if you're somebody who doesn't want to do it a certain way, that's okay. You got to do what's authentic and real and fits for your way of doing business. If you're trying to do something that's not natural to you, it's going to show and it's going to fail miserably. So just because I'm giving and pointing out some examples, i.e. social media, doesn't mean that everybody has to go in and do it the same way, because there's a lot of agents doing a tremendous amount of business who aren't posting every other second on their social media account.
Yeah, I also would like to give a plug for all the boot camps we'll be running here at DMAR over the next 2 months on that exact stuff, how to actually make money off of this stuff. So thank you for that plug. And if you guys in the audience want to take us up on that, just hit us up on our calendar. But Steve, actually, Sharry brought a really good point up. I actually saw a lot of team leads move out of their home markets during the pandemic. Is that something that you're seeing as part of this future, seeing these teams scale? And as Sharry's seeing it, I know Jim is seeing it over at NextHome. Are having these team leads be thinking more regional, or even well, actually, I should say, if they're in Naples, the Naples to Minnesota, Naples, Florida to Minnesota attachment is going to be there because there's a lot of snowbirds that go back and forth. Is that something that we should be thinking about when it comes to how technology has enabled these folks to be able to scale their business beyond borders?
Yeah, teams can scale out, as Sharry pointed out, they can scale outside of their home market. Once they figure out the formula, whether it's through SEO, SEM, social media, billboards, funny enough, direct mail, they can enter a new market, and within months, as a team operation, they can scale and become profitable in new markets. There's no boundaries to where a team can operate. And now we have new kinds of teams that are, Place is the largest team in the country right now. And Ben Kinney is a phenomenal guy. And he's found a way to take a whole platform of how to run a team and partner with teams who are, good salespeople, local knowledge, and give them the platform to run their whole team. And he enters a partnership with them. So the structures and the kinds of agent practices and team practices are changing. It challenges, I'm glad I don't have to have personal responsibility for figuring out in the future how you actually categorize agents and teams in the future will be very difficult.
Oh,
Because
absolutely.
anyway, the other thing, talking about brokerage companies, so what hasn't really changed? And Sharry knows this better than anybody, and Jim knows it. When I talk to brokerages and say, let's not complicate this thing. Running a great brokerage, you just got to do three things. You got to recruit talent, you got to develop the talent, you got to spend less money than you have coming in. It's not complicated. Now, the execution of those three things is very challenging. So, where do I think, and I have some brokers starting to use AI and data tools to become more effective at how they select agents to recruit. As an example, they can spot patterns of behavior among agents in a big data set, an MLS, Minneapolis, St. Paul, or Denver Metro, Front Range, or wherever it is, and spot patterns of behaviors among agents as to their satisfaction and with their current brokerage and their likelihood to move. The other thing we try to tell everyone is, if it were only and always about the money between a broker and an agent, everybody listening in today would be out of business.
Yeah.
Because there's always less expensive brokerage options. The key to find out, Sharry runs one of the finer companies, has been one of the finest brokers in the country Sharry, I hate to admit it, but I first met your company, Ron Peltier was an office manager.
That's way back when.
This is way back. And the guy running it was a guy named Larry Davis, and I got to meet the founders, the Rovics. It goes back a long, long time, but none of that has changed in all these times. In our study a couple of years ago, we found it fascinating. We did a study of top teams. The sample size was large. It was over 400 top teams around the country. And we asked them, what does the broker do that's most valuable for you? And they said, number one, legal and regulatory guidance. How do we make sure we stay within the bounds of the business? Interesting enough, number two was the brand name.
Yeah.
Right? So we asked the obvious question, well, what could they do more that would be valuable? Funny enough, number one was more legal and regulatory guidance. But number two in that wish we had was business coaching, not sales coaching, but how to run their business more effectively.
Yeah.
And I think that we did that in partnership with California Realtors. And I think we did that 4 years ago now. When I look at those 24,000 top individuals and top teams, the thing to stop and think about is about 98% of them are with a named brokerage company. I mean, look, top individuals and teams could probably run their own company, but interesting enough, they don't or haven't.
Yeah, too much risk.
They're with an Edina, they're with NextHome, they're with they're with Kentwood in Denver, they're with Madison and Company in Denver, or they're with Coldwell Banker. I mean, it's just amazing. Isn't it interesting that the top performers in the industry are tending to align with well-known companies, which tends to support the fact that that by itself is worth something to them, or else they'd be elsewhere.
So that actually kind of brings up the next question for me, I think, for Jim and Sharry. I think the days of brokerages trying to be tech companies is done. I think it was always kind of a farce, but the proof is in the pudding now.
Hey, the good news is the industry only spent $20 billion finding out.
Yeah, the $70 billion that have been pumped in have been all to buy houses, right? Has never been about technology, especially recently. So do you prioritize then this business training, which we all know has been a thing, no matter how big your brokerage is, from 5 agents to 150, 5,000 agents. And do you do things like make sure your technology is more customer centric, for example? It evens out the experience for them, partnering up better with better vendors that way. How do you prioritize now going into the next 5 years when technology is almost kind of vanilla everywhere. And there's so many of them out there that do the exact same thing. I've talked to 4 companies that do AI in the last week, right? So, Sharry, maybe we'll start with you. How do you prioritize? Because you guys have always had a consumer-centric approach to your tech and to your marketing. To Steve's point and Jim's point, that is all that we can all learn from, no matter how big your brokerage is.
I would
Whoop.
Mr. Jim,
agree.
you. Oh, there we go. Sharry, you back?
Yep. Can you hear me okay?
Yeah, we're
Yes.
good.
All right. You know what? I would agree with you. The whole tech piece has become vanilla. It's like I say to agents all the time, it's like electricity. They expect it. They expect it. The more complicated we try to make it as a broker is when we get it handed to us. And we've tripped up over that in the past too, and learned from it. Where we need to go, we all need to go, is a better experience for the consumer and aligning what we do, and we do very well, led by the agent, with that consumer approach. And I would argue nobody has completely dialed that part in yet. But I think I don't think we all see it. The race is on for that, and to weave that together and knit that together in a better way. And it's going to be an expectation of consumers going forward. It's already there. It's vastly in need. And so that's what we'll see. And that's what you hear about behind the scenes that all the brokers are working on right now.
Yeah, it's kind of fleshing out and smoothing out and streamlining the experience. Get stuff done quicker in a much better consumer oriented way. Jim, thoughts on that? Because you guys are doing a little bit of both, right?
Yeah. So, well, one of the reasons why our industry's had a target on its back for disruption is because the consumer experience has not been what it should be. If you had a major complaint in the industry, not all the consumers were wanting a better experience. And so I agree that technology should be designed to make the experience more effective, more efficient, and more valuable for the consumer. And that we, as a brokerage, we have 2 really consumers, the agent, but we also have the public. And so our job is to integrate that. I think with technology, what's happened is that your bigger firms are able to, on scale, provide a tech stack that is significantly, it's easier for Medina, it's easier for Coldwell Banker, it's easier for a NextHome to create and provide and pull together a tech stack that A, is more consumer friendly, and B, helps the agent operate more efficiently and effectively. Because when you have margin compression, you're going to have to pick that up through efficiency and some of that technology. So that is that. And then also at the same time, we still need to, as Steve always says, you need to attract talent and develop that talent. And that our job when you're running a brokerage is to create fresh company dollar. And you only get that by having your agents sell more houses and be more effective, and bringing over talented agents, whether they're starting their career or with somebody else, over fresh company dollar. And you do that by delivering value to the agent and how they can succeed regardless of what the market is.
Yeah, well, in either way, a streamlined consumer experience is going to be a good thing no matter what the market throws at you, right? So I think we, for too long, kind of take our eyes off the ball. We've been hurrying to get people into homes the last 4 years, 5 years, rather than thinking about their experience. Now that in my mind, that taking a breath and thinking about what that person's going to be feeling as they walk in that door now is kind of back in motion.
Well, I share with you, I recently bought a second property, and in the process, and this is the mortgage side, I chose my mortgage company based on the ease at which I could transfer all my financial data to their website with as limited clicks. I investigated a couple, and one didn't have that ability. I'm like, I'm not plugging all that stuff in. I want the synergistic effect as a consumer. And so, and I'm a baby boomer, not one of the younger people here.
Yeah, A good thing to think about, though, when it comes to tech in general, though, is how cheap it's become and how almost off the rack a lot of the offerings have come into play. It's that's a sea change in the last 10, 15, almost 20 years. One of the things we're doing here is to kind of bring these companies in sooner, because what these companies are doing, they're seeing a roadblock with broker owners and then going to the consumer. But the consumer, right, they're on a longer timeline now to buy and sell a home, right? So, there is now an opportunity to team up with tech a lot better now than I think in the last 5-10 years. Now is an opportunity for the independents out there, or truly independent. Don't discount your size, because you can do a lot of the things that these folks can do, and build your own brand. Frankly, it's going to be really important on top of that consumer experience. Let's talk about agent retainment and attraction. And I hate the word recruiting. I do. I think you should be attracting agents more often than not, right? So, what are your priorities as you go into this world where, especially now, tis the season where folks are being wooed every day. I know I got some friends on this Zoom that will echo that. How are you prioritizing agent retainment and attraction? What are you doing to keep these guys in the fold and to keep them drinking your Kool-Aid? Sharry, you want to start?
Yeah, I mean, kind of back to my original comments, it certainly isn't a one size fits all. And so it's, we're heavily dependent on our managers at their level to, hear and understand what the mix is. And complicating it is that with COVID, and agents aren't coming in as much. And I share this because as much as we're talking about teams and team leads, they are having the same challenges that we talk about as a broker. They're having the exact same challenges. And then coming back to us to say, well, they're recruiting my agents, they're doing this, they're doing, welcome to managing an office.
Welcome to broker world.
What you signed up for, that's what you've got. Yes. So it's really, going one-on-one, and that's at all levels. So whether, for me or the regionals or the managers, and understanding where agents are at, where their, needs. Obviously, culture is a huge piece. I bring that up. I think it gets overstated and overplayed, but that really is a critical component. And as much as, I was listening to a podcast and a couple people on their podcasts, and they were talking about how the broker doesn't matter today, it's about them. I think if you're an agent saying that about a broker, or broker saying that about an agent, it's pretty arrogant. We both need each other for a whole lot of reasons, everything we talked about here. And in today's environment where turn on any news or you look at your phone and you think the world's gone mad, the one thing that people, I think, are clamoring and want more and more of is trust. And to be able to trust whether it's our news sources or news outlet, whatever. Our politics, I don't know, trust and politics can never go in the same sentence, but people want trust. And so that's the part that, again, as a broker that we bring, and that's really critical to us and to our, the legacy that we've had, and continuing that. And something that our agents continue to pay for, because like you said, there's always a cheaper model somewhere else.
I would echo, even now watching really a lot of the folks, not only as you as panelists, but on this Zoom, culture is actually, it might be overstated outside this industry. It's not talked about enough inside of it, right? Culture means more than getting a good split. Culture is being comfortable with the folks that you're surrounded by in any environment, both online and offline. The culture is absolutely huge in the brokerage world. Steve, are you seeing any kind of bigger culture or retainment attraction stats out there that are noticeable? It's no longer the dollars thrown at you anymore, is it, to woo these folks?
Well, one thing, and I've spoken about it infrequently, but at certain times, because I've had a front row seat to watch what happens. When a brokerage company or national organization starts valuing money over the culture, they're going to bleed out. It'll take 3 to 5 years for them to know that, but it will happen. And I mean, we examine the performance of brokerage companies. We just put out a report, I don't know, a couple of months ago, based on looking back 10 years. Who are the leading firms at recruiting agents, growing transactions and volume, and agent productivity? there was not one brand, there was not one location, there was not one size of market. The firms that were in the top 50 in those categories, all different kinds of companies, large and small. So since it's not size or brand or model or location or average price, must be something else. So it has to do with the leader and the culture they have established. And Sharry said it best. When study after study we've done, interviewed thousands of agents about this. When you ask them, why are you with that brokerage company? Why are you staying there? What is it about them? They talk about communication and discipline and accountability and building a sense of community. And when you have them and just let them talk, what do you value about your firm? You know what? Until I actually ask them, well, how about their marketing and tech services? Oh yeah, well that's table stakes. Any good firm's got to have some level of marketing or technology or training support. But when you interview them, and we've done it with 1,000 agents and teams, Sherry's right. It comes down to, do I feel that my manager or the owner or leader of the company actually does care about me, and do they have my back? And can I trust them to act in good faith with me? You break that, or you tell your agents or teams that you care about your monetary metrics, I promise you, if you don't squelch that in a hurry, you'll start to bleed out. And we've seen this happen with local brokerage companies and national real estate organizations that were once dominant and now aren't, because they forgot that simple thing.
Yeah.
Of course, the other thing that they want to understand, that their leader is not complacent, that they have a leader who is always looking to see what do we need to be aware of, and then sharing that with the people of the company. What do we think about that?
Yeah, and actually, that's a really good segue to Jim, because James Dwiggins, for as long as I've known him, when he was operating, a small little independent brokerage, that was his hallmark. He was unafraid to go out there and talk. Simply with Ron and Peltier and at Edina way back when. I remember the saber rattling from from way back when. So, does that make you rethink how you educate, how you bring on new agents in the future, Jim, as things shift?
Well, so speed, right, is important, especially to echo Steve's point about leadership. When I think that obviously the leader has to have a vision. The vision is also needs to be communicated on a consistent basis. It's how we connect with our people. It's how we connect with our consumer. Then the key is that we then empower our people to achieve their role in achieving success. But one of the things that and then it's about accountability, right? And holding people accountable, and then you either course correct or celebrate. But one of the things that's critical to success in anything, whether it's a family, a business, life, is when something threatens the vision, you have to act quickly. The industry is changing so quickly. The amount of flash webinars we've done at NextHome in the last 3 months, have been phenomenal, because we realize everything's changing that quickly, and the faster we get the information to our people, the better. Speed of communication is critical. I think to Jack Welch, who was considered, the CEO of the century, they asked him how he spent his time. He said, I spent 70% of my time communicating the vision. My mistake was I didn't spend enough time. We don't communicate enough with our people. And as a leader, our people crave that interaction. They want leadership. To Steve's point about they want more legal and protection and brokerage, that's part of the leadership, okay? And that business coaching, that's part of the leadership, helping your people get better. Our job running a brokerage is to empower, equip, encourage, and enable our people to succeed at such a high level, they don't need us. However, we need to create an environment they don't want to leave.
Oh, that's
great. That's our job in a nutshell.
Yeah, vision, related to all the other products and services you're bringing out, Flash webinar is actually really good. I've actually been on a couple of James's Flash webinars. They're great. Something to think about out there. Keep things simple, right? As related to why you exist. So we'll wrap this up. I appreciate your time, but maybe can you guys share one sacred cow? Because we've been talking about getting back to basics, and Sharry mentioning TikTok. A pig is flying someplace when it comes to her mentioning it. But Jim, let's talk about one sacred cow that needs to die in this industry right now. What is your sacred cow that needs to never come back, no matter how normal things feel?
Let's get rid of the ego advertising, whether it's on a brokerage or agent level. But let's not bring that back.
Amen to that. Steve, what are your thoughts? Sacred cow that needs to die. Is this a safe space, Steve?
I don't have a clue. I mean, we noted back in 2020 that the top brokers in the country had the biggest one-year market share increase in history. I mean, by a factor of 10 in 1 year. The only thing I saw that changed was starting in March of 2020, continuing for most of the year, is that leaders were on Zoom calls or phone calls daily, multiple times. I think that what we forgot is that constant touching, and Sharry brought up the fact that so many more people are remote now. You don't see them in the offices. But I do remember one of my piece of advice was, first, protect your balance sheet, but second, if you think you're close to your people, get closer. Mm. And I just think that for people in Jim and Sharry's positions, it's exhausting. It's exhausting.
Easy to do if you don't have 1,000 agents, right? So, but staying closer to your agents. So the thing that goes away that I would say we don't, the whole last, 6 months, everybody loves being back together, loves being back together. Well, it's every bit as hard or harder than it used to be get everybody back together. I mean, personally in a meeting room. Yeah. And I think a lot of the leadership has forgotten the lesson of 2020, which is just the availability to have the Zoom, or whether it's a webinar or some fashion, to have a consistent, frequent, ongoing, possible interaction with your people. Awesome. That's awesome.
Listen,
Sharry,
I don't think we need to go back to office sales meetings in person. I don't know they'll ever come back the way they were. Yeah.
Sharry, any sacred cows that need to die, in your opinion?
Yeah, well, and one that I've been talking about, because we do monthly company-wide meetings. We have spent how many years now talking about low interest rates and buy on low interest rates. We heard from Steve, they very likely could go up. We have to stop talking about interest rates. Yep, payments are important. Every time I say that, I get eyes bugging out at me. But truly, if we continue to keep our focus on interest rates, every time that new hurdle comes along, the agent is paused. They're stopped in their track because that was their whole mantra. So I am encouraging everyone, stop focusing on that. And my other big pitch that I get on my soapbox is spending a lot of that time, instead of being out on social media talking about how great you are. Love the comment on Jim on killing the ego. Start talking about why real estate is local, because the news narrative is going to get more negative nationwide on real estate, not before it gets better. And so I have, for about the last 45 days, been pushing everybody. Start talking about real estate being local. Start talking about your local market, because we've got to help change a narrative. People don't read anymore; they do headlines, and they headline surf, and that's killing our industry also, because that's what people look at and think the sky is falling. And there's market areas that we have in our market, yes, we had great appreciation, but we're not going to be that bubble market like some others that we hear about that the media likes to write on. Yeah. So that's not really it kind of is a kill, just kill the ego. Let's go along with that. Stop your damn ego and going on the local market and what's happening in real estate.
You mean it's not about them?
It's not about them. No, it's not. And that's not what people care to see.
At the end of the day, it's all about that buyer and seller out there and how much they
Yes.
trust you, right? So,
Yep.
Sharry, Steve, Jim, it's been an honor. And Sharry, specifically, it's good to see you again. It's been
You
far
too,
too
Nicole.
long. Thank you guys all for being a part of this. And for those of you guys who want to stay on in the Zoom and network and talk about what we've been discussing here, you're welcome to do that. But thank you guys again so much for this. This has been this was a fantastic hour in my mind, boy. I learned a lot about how I'm going to be engaging with my broker owners in the future going forward. So thank you guys for being on here. And Melanie, anything else that we're missing? You're on mute, Melanie.
I'm unmuted now. I just want to thank one more time our sponsor, Chase, Matthew Hay. Thank you for supporting us. And then one announcement: on August 31st, we have our DMAR member appreciation event. We'll have a taco truck, ice cream truck. Come on by. It is from 11 to 2. So come join us for a little fun. And that's all.
Hey, September 23rd, I'm doing another Zoom with Britney Spears' realtor. So if you guys want to jump onto that, and we'll get a global luxury and celebrity real estate market update from two really cool people, friends of mine who sell real estate at high levels. So we'll see you guys on the 23rd. But if anybody wants to stay on, feel free to do it. Sharry, Steve, Jim, thank you so much.
Thank you.
Thank you.
If anybody wants to continue the conversation, I'm happy to have it.
Hi.
Anybody have a question?
I just wanted to talk to you about the Lucible listing. Yeah, and I want to give you some other stuff. I actually have to pick up a home book. Okay, fair enough. I'm gonna go to Rebuilding Center to try to buy a window thing out. Yes, I did.
There we go. All right. Anybody have any questions on anything? Want to talk about anything? Oops, Cindy. Sorry, I muted you. Nope, you're still muted. There we go.
I got it. Okay. So as a boutique brokerage with only 4, what is your best suggestion for how I stay on top of the legal and market changes to give to my realtors? It's very difficult to get that information if you're not part of a big brokerage.
Yeah. You know, the big thing is if you're a realtor, I'm assuming you are because you're on this, but Scott Peterson, have that.
Well, I do all that and I have them do it. Yeah.
And you know, the big thing is to have Scott come into your next your next meeting. You know, he lends a local flavor to a lot of the national stuff that in an entertaining way, frankly, that
I know he's great. Yeah.
Yeah. And I will say boutique, here's the thing that's been the big difference for me. So 48 states of real estate. Okay. I come here and people here are fiercely independent.
Yes.
And play up your boutiqueness.
Okay.
But don't be afraid to talk about why I should use you, because we're at an all-time high of agents and realtors and non-realtors and tech companies. I need a really good reason why I should use you. And if you have that network both in the state and in the region, or if you're a really good marketer, talk about it. A really good example of that is the Boutique Real Estate Group out of Malibu. He only has about 20 agents, but has a ridiculous amount of market share. And what he caters to is luxury marketing, video for everything. So, you know, have that calling card that distinguishes you, because boutiqueness is not a bad thing here.
Oh, I know that. It's just, my biggest, you know, one of the points they brought up in this fabulous hour was the biggest thing realtors want is the latest legal news. Am I still acting correctly? So what I lay awake at night thinking about is, do I have the latest? Have I got what I need?
Yeah. And you may want to consider, you know, bringing in somebody
will.
from outside, right?
I will. Yeah.
Somebody who can lend a new flavor. Because yeah, at the same time, I love Scott too, but he's kind of everywhere.
Yeah,
You
exactly.
know what I mean?
Yeah. Okay.
Yeah. So Corey Musson is asking any recommendations for learning social media. I'm actually doing a bunch of boot camps over the next month. It's gonna be free. I couldn't get CE for it, but for those of you guys who don't know, my past before NAR or before DMAR was running NAR social media. Because before that, I made a lot of money selling real estate off of social media. I was actually one of the first agents for Edina Realty to sell a listing off of a Facebook ad. And stuff like that I teach then, and I teach even now. So we're doing a lot of stuff here at DMAR. But what I would warn you more than anything is that there are a lot of snake oil salesmen out there right now who have never sold real estate, trying to tell you how to sell real estate on TikTok and Facebook. They're just trying to sell you a program, coaching. And it's at an all-time high again, because so many of us are really struggling to figure out what's next. So I'm teaching it. By no means am I an expert, but I can teach you how to make money off of it. My wife is a top realtor, and we use a lot of what she talks about in her business in coaching. You guys can turn it into a local flavor. So. Anything else?
Hey, Nobu, it's Jay Manansala.
Hey, Jay.
Hey, how are you? Hey, just real quick, I believe I mentioned the name to you before, but I was on the entire call this morning. And it reminded me of, the panelists of what they talked about was Bill Chi, who ran a very successful small real estate firm in Hawaii, bringing in joint ventures, mortgage, retaining agents, building a culture, community. I mean, he's been doing that for the past 30 years, and he was just very successful. And now he's no longer part of the company, and now it's falling apart, right? So that's the reason why I think it's so important to have a good leadership, not just in production, but building a community. It got to the point where the agents didn't even want to leave. For them to recruit agents was very easy, and they were, competing with Hawaii Live, Coldwell Banker. It was a very successful business for him.
Yeah, Bill, to talk about vision, Bill had vision. Not only had vision for his company, but he had vision for his industry. His line coming over the hill, kind of almost trademark speech, is still being used today in this industry, not only from the leadership perspective, but from the association and brokerage perspective as well. So if you don't have a vision as a brokerage leader out there, figure one out. Where do you see your group of people going, and how are you going to get them there, especially over the next 10 years? I don't think we've seen change until the next 5 to 10 years really gives it to us. So Jay, really appreciate that. And Bill Chi is awesome. Love that dude.
All right, thank you.
Thanks for coming on too, Jay. Appreciate it. Victoria, Nora, you guys good? You're the only two people on camera. I see Juan's mirror. There he is. What's up, Juan? You guys good? You're muted.
Yeah, we missed the last 15 minutes getting ready for a listing appointment.
Yeah, man, go ahead and go get it. I will say, tech stack wise, we talk to a lot of technology companies here. I do personally. So we're going to be putting these guys front and center to kind of help you with your tech stacks. You don't need to spend a lot of money anymore on technology investment. All right. It's just partnering up the right folks with what your ecosystem already has. So if anybody needs any help with that, I'm happy to chat with them about it as well. So it's what I specialized in when I was at NAR. Okay. All right. Well, if there's no other questions, I think Julie/Melanie, we can get back to it. Juan, my email is nhata@dmarealtors.com.
NHATA.
Yeah, here I'll pitch it. dmarealtors.com. All right. Thanks, guys. Really appreciate your time today.
Thank you.
Thanks, Melanie. Thanks, Julie.
Mhm.